Hello friends and welcome to my YouTube channel Simply Talks, and today I'm going to talk about Swaraj Engines, which is down 45% from the top and has recovered a bit in the last few weeks. So let's understand whether you should invest in this stock or you should avoid it. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Swaraj Engines, here's a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel, help you also ask me questions in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts that I put up from time to time. One more thing is if you pay for $100 a year, so you pay $100 upfront, you get a 1 year subscription, that's 2 months free if you pay just upfront $100. So kindly take that advantage of this offer on Patreon. For detailed market or company talk, you can directly email me and we can work things out. Now about the company, Swaraj Engines was established in 1985 and they provide engines and components for tractors. So as the tractor sales are increasing and tractors are doing well, and we are seeing that there's better monsoon or a normal monsoon that is expected this year, I think sales will improve going forward. So their production will also increase and sales would increase. So this is a company that makes tractors as well as engines for tractors. Top brand in this segment, and management is pretty good with high pedigree, with good dividend payout, and a stable company it has been over the last decade or so. A niche player in India, agri story it is. The market cap of the company is around 1600 to 2000 crores. If you look at the financials of the company, then December numbers, so these are Q3 numbers that I'm talking about. Sales has gone up by 60%, profit has jumped by around 90%, and which is quite commendable. It's a debt-free company, return on equity of 30%, operating profit margin of 12%. See, what this shows is that rural economy and especially the tractor segment has been doing well for the last 3-4 quarters, and this is no exception. Maybe the March quarter would be hindered a bit, or the June quarter would be hindered a bit because of the kind of surge we are seeing in the cases, and this could go into the hinterland, into the rural phase as well, whatever is happening in the urban India. So all this taken into contention, there could be signs of a shutdown, there could be signs of localized lockdown that is taking place. So in that regard, we could have some problems in the June quarter. Otherwise, things are looking very good from the tractors front. If you look at the performance, stock is still down around 30-35% in the last 2 years, or in the last 2 years you can say that it's down 40 to 45% from the top. Numbers have been fine, so numbers are not bad, numbers are fine, not great. So when you go back to FY18, the numbers were very good, and in that regard, when you compare it, so there was expectation that there could continue to be a 15-20% sales and profit growth. That has not taken place, but still, considering that what we have seen from 2019 and the kind of pandemic we are having, and everything that is around us, the numbers are robust and resilient. That's what I can say. Return ratios are very strong at over 20% ROEs. Strong dividend yield is also a very positive sign. Has been an underperformer, although things in tractor segment is improving. So as I have explained, the stock is perhaps at a very big discount at these 1300-1400 levels, and has underperformed to the way the company and this segment has worked. So probably going forward in a year or 2 years time, we could see a real surge in these sort of stocks. Sales are starting to pick up. As I said, June could be up and down, but then we could see things also improving going forward in 3-4 months time. So why I believe it is a buy on decline. Market leader in the space of engines, not in tractors. Tractors we have Escorts, etc. But in the space of providing engines for different companies for tractors, it is a market leader. A rare agri auto firm into engines. There are very rare companies which are listed, at least that I know of. If you know any other, then you can kindly write. But this is one. will outperform as the rural economy recovers. As things improve even further, this stock will outperform, and especially in the monsoon season, these sort of stocks really perform well. So this is the onset of that. So probably next 3 4 months, also on the short term basis, this stock may perform appreciably. The recovery in tractor has been positive over the last 6 to 8 months, and it is continuous right now. Attractive valuations currently as 15 to 18 times earnings is not that you can say expensive. It could go up to 24 to 25 times earnings, and currently valued at only 1.4 times sales, and that is also extremely positive. 1.4, 1.5 times sales can easily go to 2 and a half times sales going forward. If you look at the technicals of the stock, then there is strong support between the 1000 and 1080 levels. It has gone up from there, so 1350, 1370, round about there is where the stock is. So it may move in the monsoon season, as I have explained, and this could just continue going forward. So next 3 4 months you could see a real surge in the stock, and I can tell you that once 1700 is taken out, we could see even 24 2500 on the stock. So it is extremely undervalued at the moment. See, may see further slide from here as markets remain volatile, and that is what I believe. Next 1 month could be extremely difficult for the stock markets. We could see some 8 to 10% decline, and that would be a real opportunity to buy with the kind of monsoon that has been predicted. If you get it around 1250, 1280, nothing like it, to buy at that point of time, and probably hold for a year or so, and you can see 1700 to 2000 on the stock. So what needs to be done? In my opinion, buy on major declines and wait for major declines. So do not rush to buy the stock. So I'll take a minute to explain this point. So do not rush to buy that you see, okay, there is time to buy this stock, and it looks like it's a very good company. Let's buy here. Do not buy big time. Wait a bit, buy a few shares probably in the next week, and wait for the market to settle down. We could see a slide in the market. I have been telling that for the last 2 3 days, and it looks like that way with the kind of pandemic that is surging. I'm not saying we are going to see 10,000 or 11,000 on the market, but a good 1,000 point decline is very much possible from here, and that will be the time to pick up these kind of gems in this scenario. So buy few shares here, so that if they move up you make money, and then you have the time to buy more when the stock declines 5 to 8%. So that's my point. It's not a very long term play. I would say 3 years would be suffice, and take a call on 3 years as to what should be your targets, and just take that through. Do not buy it for 7 8 10 years. It has not performed that appreciably over the last decade that it should be done like that, but it's very good for the monsoon season and for the agri play to play out in the next 3 to 4 months. So that is my point. Have less than 5%, or at least maximum no more than 10% exposure into such stocks. So this was my video on Swaraj engines. Please like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it. And kindly support me on Patreon. Thanks a lot for watching.